Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, September 14th, 2012. What can we say? Ben Bernanke has implemented QE-3. It's on its way. Very strange to see this since the market was at a high. Normally he implements a quantitative easing when the markets are slumping and they're in dire straits and they just can't get out of their own way. This time the markets have been fueled and injected, and he just added more fuel to the fire, probably pulling out the biggest bazooka of them all yesterday with unlimited quantitative easing and mortgage-backed securities. That has certainly helped many of the housing stocks. You see yesterday, housing has already been very, very strong, but just take a daily chart. Take a look at a daily chart of Toll Brothers, and you'll see how this thing has just really taken off. Even yesterday, if you look at an intraday chart, you can see how the stock was down and really rallied after the QE3 announcement, right around this 1 o'clock, 12 o'clock time frame. So again, markets are really in euphoria right now. It's just money printing going on, or money creation by central banks all over the world, whether it's the Federal Reserve in the United States, the European Central Bank, or the People's Bank of China. Just a lot of money creation going on. That is going to send commodity prices higher, and that's really what you have to watch for. There's no great level today. You already have the futures up, the S&P 500 E-minis up 6.5 points. You also have the dollar lower again today, down another 31 cents. Now the dollar has hit some support levels down here, and it's also very oversold. But so you could possibly see a short-term bounce in the dollar, but nothing more than that. With all of this quantitative easing, really what it's looking to do is just really disseminate the dollar and destroy it. So we'll see how it goes and how it plays out going forward. But nonetheless, watch for higher oil prices, higher commodity prices down the road. That's really the end result. Let's take a look at some gold and oil this morning. We'll start off with gold, which is only up $1 to $1,774 a share, an ounce, I should say. Let's take a look at the GLD, which is a proxy for gold, and you'll see it's down a little bit from yesterday's high. Gold really ran into a very big resistance level yesterday. It's had a huge move now. I don't know how many weeks it's been up in a row, but the past 4 weeks gold has surged. The GLD has gone from basically 156 all the way up to 171. That's just a huge move in spot gold. So just realize that gold is a little bit overbought into resistance, but it doesn't mean it can't go higher. Again, dollar goes lower, gold will go higher. But right now, I think gold has run its course for a little while. It would be healthy to see a little bit of a pullback at these levels, and I think it is possible. Let's take a look at oil right now. Light sweet crude is trading up $1.57, just underneath $100 a barrel. If you take a look at the USO, and that's light sweet crude, USO is a good proxy for oil, and you'll see today it's trading at $37.07. I believe that this is a new 5-month high for oil, or somewhere around there. So I do believe it's a 5-month high or a 4-month high for the USO. And we'll just see how it plays out. Again, the weaker the dollar gets, the higher oil goes. I know you're going to hear about tension in the Middle East. That really doesn't drive the price of oil. The price of oil gets driven by a weaker U.S. dollar, and that's the bottom line. So again, they'll blame it on crisis in the Middle East or tension in the Middle East. That's pretty much nonsense. It's really about the dollar. Sure, you could get a spike if there's conflict in an oil-producing country, but the real spike is coming from the weakness in the dollar, and that's pretty evident by just looking at any chart. Here you see the USO a little bit off the highs of the day, but nonetheless, it closed yesterday at 36.51, trading at 37.05. So watch that dollar. If the dollar plunges again to the downside, oil should go higher. Right now, we do have some support at the dollar, where the dollar level is. So there's a chance the dollar moves up a little bit, but I don't think it's going to be all that much. In any case, that's how this market's playing out. You could also take a look at all the base metals today. These have been some of the weakest stocks. Base metals are all soaring to new highs, whether it's Freeport-McMoRan, Southern Copper Corp, Rio Tinto, BHP. They're all up this morning. BHP yesterday, in fact, closed at $70.51. It's trading at $72.11 this morning. TCK Tech Resources is another one. Cleveland Cliffs is another one. Everything is getting a big power surge here, just off the QE2 news. Now, In about 3 minutes, we're going to have some economic data being released. It looks like that overall we're going to have, I believe, you're going to have CPI and retail sales. That will be out in just a few more minutes, so we'll see how the market reacts off that. I don't think the news events make a difference at this stage at all, and it could be housing starts, it could be unemployment. Really, the market's just on this QE kick and this QE euphoria, and that's really the bottom line. If you weaken currency, you should increase asset prices, and that's happening across the board. So we'll see how this plays out. But one thing I will say, if the Federal Reserve had to do this when the stock market is at a high, it just goes to show you how dire things really may have looked, unbeknownst to anybody out there. So very, very surprising. I guess I'm a little bit surprised to see the QE happening, but I'm not overly surprised. Now, some stocks in the news that are moving today. I don't have many. Hopefully, we'll have much more going forward. One is the TLT, which is the iShares 20 and 30-year treasuries. You can see here selling off pretty sharply, closed at 121.53 yesterday, trading at 119. That means money is coming out of bonds, going into equities. That's what it's telling you. At least that's what it's telling us this morning. Sure, there's a little bit of support down here, but nonetheless, money is coming out of bonds, going into stocks because of the quantitative easing. So keep that on watch. There's no play here on the TLT. I'm just showing you that money is coming out of this, going into stocks. Let's take a look at SPLS, which is Staples. Staples right here, having a nice little pop. This has upside to $12.65, and after that it has upside really all the way to the $13.40 level. You probably could get some scalp pullbacks, but again, these are just intraday scalp levels, nothing more than that. They are not swing trading levels, okay? Let's take a look at this A-Log. This stock is soaring this morning, closed at $69 yesterday, trading at 77. It's a light volume name. It may go even higher. I don't even have a good level for it. I suppose this thing, can get to its all-time high double top of 79, but it's a light volume name. It's a fairly strong gap, so be very, very careful with this. Just pointing it out, though, it is a mover. Resistance, I have, I'm going to say right around that 79, 79.50 level. Then really, it's all the way up to 82.50. So again, this is a light volume name, so you got to be real careful with this, and these are just intraday resistance levels. All right, with that said, everybody, I'm going to keep it short and sweet today. It is a Friday. The markets are holding up fine. There doesn't seem to really be anything wrong. You have that economic news coming out right now, and it looks like the market, for the most part, is holding steady. Looks like the CPI is out, or whatever else is coming out at 8:30 in the morning. But again, the market is on this euphoric quantitative easing sugar high, and that could last at least a little while. I would think a few days at least. All right, with that said, everybody, have a great afternoon, a great morning, and we'll see you on the charts on Monday. Take care, everyone. God bless.